We've had the cyclones, I think they were also touched this morning, and the devastating impact of cyclones on production and finally on prices. So what is the message that we are hearing from the region? The message is one of difficulties in properly projecting, using the current models to project the movements in prices. That is one message. And it's a major message of concern to governors. And two is the estimation of the output gap. And the implication of all that on the conduct of monetary policy. That's where the concern is, and I agree with my colleague from Angola. The issues that you are raising are the issues I'm hearing from different central banks. That there is an impact on relative prices, there is an impact on real variables, and because of that, the natural interest rate is also affected.
The multifacetedness of climate shocks in terms of the impact on the economy is what concerns us. But more so, like Luis mentioned, the frequency and the impact of the shocks has been so big in the recent past. We've had shocks in the past, financial sector crises, we have had COVID-19, but the frequency is not as high as we are seeing now. So it means that the traditional models that we have been using for our forecasts and to inform our decisions are being challenged. So we need a rethink of what we are going to do. So let me bring it down home to Bank of Uganda. Now, in our case, we know that really the very clear shock in terms of price is on food crop inflation. And food crop inflation is really a function of the variability of rainfall from the long-term trend of the rainfall patterns. So what the team in the research department has done, they have taken into account the variations from the medium-term, from the long-term rainfall patterns, incorporated this into their nowcasting models.